talking about level counting when it comes to trading gold. All right, so for this video, we're going to cover a few things, right, which are very important, and I'm going to be taking you through the charts. So the first thing that you want to do when trying to count your levels on gold is to understand the bigger picture with clarity. Right, I mean, that's what a lot of people fail to do, because the moment they open up a chart, they want to run to the 5 minutes, the 15 minutes, you know, your scalpers. But understanding the bigger picture with clarity, whether be it swing trading or scalping, you'll be able to navigate the charts better. Right, so the most important thing is to understand what's really happening in your daily time frame, right? What's happening in your higher time frames, rather. Right, you want to have a clear understanding of that, and these higher time frames do not have much noise, so they allow you to pick your points of interest with clarity. Right, so you always want to understand the bigger picture. Right, and then number two is we want to know where price is coming from and where price is headed. Right, so you really need to understand your market structure. Right, that's one thing that you need to understand, right, with clarity when it comes to the charts. Where is price coming from and where is price headed to? All right, so if we just look at this daily weekly time frame on gold right here, we can understand that from this point, right, we had a move to the upside, which was a rally, base rally. Right, so we don't really want to go too back, too far. All right, we want to focus more on the current market structure. So this was a buy area, as you can see. This was a buy area right here. Right, so as you know, we're already focusing on what's happening right here. We really want to understand where price is coming from, right? And that's why I said you need to understand the bigger picture with clarity, and then you need to understand where price is coming from and where price might be headed. Right, remember, we're working with probabilities here. Right, so just by understanding that, one thing you can pick out is from this point, I mean, this was last year, we had a nice peak formation formed. For us to get to that area, right, for us to get to that area, we can see that we had this supply zone right here. Right, we can see that we had a peak formation formed and a long sustained run, a drop, that being your level 1. All right, we had another drop being your level 2, and we had the last drop into level 3, and we can identify, right, a peak formation. So that's where price is coming from, and that's what you need to understand with clarity. Remember, if we go back to our market maker cycle, we are basically looking for something like this, right? The peak formation, we want to see a drop, another drop, and then peak formation, and we expect to see a reversal. Right, we expect to see a reversal. So you always want to understand your count better and understand where price is coming from and where price is headed to from your higher time frames. Right, so we can see that from this peak formation we had a push. Right, we can also identify another push into a consolidation, and then we can identify the last push, giving us 3 levels of rise, and we could see a reversal at that area. Now remember, within the cycle, right, if we see something like this, right, false move, peak formation, we want to see level 1, level 2, level 3. This is the market maker cycle, but right, we can identify a reset. Right, and for you to actually anticipate these resets, right, you need to understand your higher time frames, right? Because once you have an idea of where price is coming from and where it might be headed, it will be easy for you to count your levels in your higher time frame. So if we look at this, you know, from the BTMM view, this is what we can see. All right, into that area, these 3 levels of drop happened into this area, right, which is the 200 EMA. A nice area for us to identify resets. All right, and we can see from that area the peak formation below the 200 EMA, and then we had a level, another level, and then last level, and then what we can identify is what we call a peak reset. as you can see, we had a 1350 crossover, all right, and this peak was already locked, and this was our first pullback to that 50 EMA. All right, so always understand the higher time frame. Always understand that with clarity, right? That's what we're trying to teach right here. All right, so just by looking at this, one thing we can see is from the weekly, fine, we had a reset and we had a nice push into that area. All right, so we can identify 3 hits to this high. Right, remember, when we identify such on the charts, right, reversal is imminent. Right, so just by looking at this, right, if you look at this from a higher time frame, right, we can look at the monthly. What we can see that we had hidden base right here. This is buy zone, right? That's hidden base. If we go to the weekly, we can identify this area right here where we had this reset, right? This was a very fresh area, and we can see how price came back to this area, right? Very fresh, in line with the cycle. If we look at this, you know, from this view, we can see we had a trap below that 50 EMA into that order block, right? A very, you know, good area, flip zone, as you can see, right? From that supply becoming that demand, right, from this area, and we can see that trap below the 50 EMA. All right, so just by looking at that, that's one thing we can see. But as you can see, the reaction, remember, you want to understand where price is coming from and where price is heading to. So from this area, we can see trap activity, right, at this supply zone, and we can see a push, all right, into a consolidation. See this big consolidation. We can see another push. And what I love about these pushes, right, is the number 3, right? Remember, the number 3 is very important. So we can see this candle, 1, 2, 3. 3 pushes down, trap, right, and then 1, 2, 3. We can see these are 3 weeks of drop, straight drop into our second level, another consolidation, and then we had the last drop, right, the last drop into that demand area. Right, so just by understanding this, you know, from a higher time frame, it is then easy for you to navigate to your shorter time frames. Right, so just by understanding that from the weekly, you now know where price is coming from. Right, so as you can see, what we had, trap activity in the daily time frame above that 50 EMA, and then we had that last push, right, giving us a peak formation. So if we go to the 4-hour, you know, we can count our levels better. You know, we can clearly see what happened here. We had a peak formation, right, which was 1 week of drop, right, peak formation. We had another week of drop, leading us into the second level of drop, and then we had the last push, giving us a peak formation. We can also confirm this on our TDI, as we can see the divergence that we had right there as we were trapping right here. So we had a nice peak formation, right, from this area. So it is easy for you to now look for trades and to now make better decisions when you are now counting your levels, right? So just by understanding this, it was easy for you to you know, anticipate that reversal at that area, because you understood that from your higher time frame, that's a nice demand area, right? That's an area of demand. It was easy for you to anticipate such, right? So you always want to understand where price is coming from and where it's headed. Okay, number 3, you need to approach the daily time frame with understanding of the daily and weekly market maker cycle. So basically, what are we looking for? Within a day, we are looking for a trap, false move, and then we want to see 3 levels of drop or rise. Right, this is what we want to see within a day, and then within a week, we would want to see a false move, peak formation, and then a week of drop, second week of drop, third week of drop. Right, you need to understand that from your higher time frame. So that's what we can identify currently. As we can see from this area, we had a peak formation, then we can see a rise. All right, we can see a rise, giving us that, you know, this can come in as our week of rise. As you can see, nothing really happened. False move, peak, and then go the other direction. Right, so we can identify that first push. Right, we can identify 3 pushes right here. In this case, I love how this came through, as you can see, and then the last push. Right, so we can identify 3 pushes. Have you been struggling to make consistent profits in the forex market, or not had enough time to analyze the market and trade? At MMK, we have experienced and qualified traders who analyze the markets and send signals directly to your phone. We are highly selective traders and we provide 5 to 10 signals weekly and a minimum pip count of 1,000 pips monthly. Join the winning team and stop donating your money to brokers. So from identifying these 3 pushes, one thing that we can see if we go to the daily, this is what we can see. We just had a nice drop, right? A trap, and then we can identify days of rise, those bursts in price, right? That's what we want to see, right? So, but we have an understanding of where price is coming from, right? So basically, that's level 1. We can call it a week of rise, but you can see how the dealer trapped. This was towards the end of the week, so you also need to understand those traps. But if you look at that, you can see that that's 1 week of rise. This is just another week of rise, right? As you can see where the week ended, that is just considered another week of rise, even though we can identify the small pushes within, right? We can see this is level 1, level 2, level 3. But if you look at the whole picture, this is just 1 week of rise, another week of rise into a consolidation, all right? And then we expect to see the last week of rise. As you can see, we had that last week of rise, and then what did we see? We saw trap activity. We want to anticipate a peak around these levels just by understanding your cycle, right? So as you can see, as this cycle played out, right, we can see what these EMAs were showing us, these crossovers, right? They're already saying a lot, right? And as you can see, we had this 5200 crossover, and then we would want to anticipate a move from the 200. So what we can see is from this peak formation, right, we just had pushes down there. We had that 1 push, 2nd push, 3rd push, and then a trap into that 200 EMA. So from looking at this from the daily time frame, what you can identify is that's just a pullback to the 50 EMA, right? So this helps, you can identify this better by understanding the bigger picture, rather, right? So always understand that, and always wait to see the market maker's hand, right? So always wait to see his hand, always wait to trade after a trap, right? So we can see that this is what we had. We had a peak formation, and what we can identify from that is we had 1 week of rise. That's something that you can actually anticipate, but you can see that we had this burst in price. All right, another burst in price that week, and then the last burst in price, and then we can also identified another push this week, and then this can come through as your last week of push. All right, and we can also look and see that our CDI is in line with this, right? We can see that outside structure that we had right there, 1 leg out, and then that signal line is back in the bends. So we'd want to see what happens around that area, right? Maybe we can grab a move back to these areas, right? But remember, we always want to understand our high time frames, and right now price is currently back at the supply level, but this supply level has been getting hit a lot of times, so that weakens that zone. But we'll see what the dealer will show us at such an area, and by understanding that, it is now then easy for you to even intraday trade, right? Because after catching a move, or after anticipating a peak formation, it is then easier for you to set your targets, right? It is then easier for you to trade in line with the market maker cycle, and make better decisions. All right, guys, so those are the most important things, right? And never forget your timing, right? Remember, gold usually makes most moves around New York session, right? You can get some very good moves, so always keep that in mind. Your timing is very important, right? Timing, right, is very important, and you have to be consistent with that, right? You cannot be a London, New York trader and then find yourself trading Asian. We know what happened during Asian, right? Not really a good time frame, a good time to trade, rather, right? Or a good session to trade for me personally. All right, never forget that. Never forget the timing, and then know your entry triggers and always manage risk. And this last one is very important, right? Always manage your risk, right? Remember, you're dealing with probabilities, Alright guys, hope you learned something from this video. Don't forget to hit that subscribe button. Remember, the only way that you can join our Telegram channel is by clicking the link in the description below, right? Any other link, any other channel that is out there is not owned by us. The only way that you can get in touch with us is by joining our Telegram channel through the link in the description below only. Do not go and search on Telegram. Cheers.